All right, guys, and welcome back to Basics, episode 9. Again, if you guys are new here, this is where I take my beautiful fiance Jessica and teach her how to trade. You can find us right here, and please do. If you're seeing this on my channel, go to Jessica's channel, vice versa. Right now, a lot of the content's the same, but it will split off soon where we're going to set Jess up on Trade Ideas Simulator, which if you're interested in trying trading and you don't want to risk any of your money, our simulator is a great way to do it. Links are in the description below on both of our videos there. But yeah, soon as you're on the sim, you're going to start making some solo vids where you're just talking about this is what I'm trading and this is why and this is what I've learned from this trade and this is what I'll never do again and this is hopefully what I'll do better next time.
Okay.
So last week we talked about trends and we'll be continuing on with the trend topic for this one, and then next video will be a test. So I hope you've been studying.
The trend is your friend till the bend in the end.
Two ones ago, which I guess will be a bit of a test now, but we talked about why we trade trends. So you remember that?
No, I don't. I won't lie.
I wonder if I should tell you now or if that's going to spoil the test. But essentially, we found that the market is not random. It's not normally distributed.
Oh, that's right.
Right?
That's right. And people try and say that it is random, but then you guys say the fat line,
Fat tail.
Yeah, the fat tail.
Yep.
Yeah.
There you go.
Because if it didn't have a fat tail, then
Then it would be normally distributed
Right.
and everything would be random.
got it.
Right? So that's why we try to identify trends, is because they go on longer than they should if the market was random. So these are the three types of trends: uptrend, downtrend. And this is your kind of classical definition of a trend, which is just to say higher highs and higher lows equal an uptrend, lower highs. We're going to go over systems tradings and trends. So it's important to note that systems tradings just means trading by a set of rules, which is how every trader should trade. Unfortunately, it's how most traders don't trade, and it's why people blow up. They just shoot from the hip. They think they know something. They'll read a story. They'll whatever. But what's important is not what your next trade does. And that's something that we really talk about a lot in systems trading. Every time you should ask yourself, what happens if I did this trade 1,000 times? Knowing that, we talked about probabilities and randomness and all of this before. So when you click a button, if that trade is profitable or not is irrelevant. If that day is profitable or not is irrelevant. It's, did you follow the rules of the system, and does the system have long-term efficacy, right? It's like saying, flipping a coin. Again, the probabilities of it, but you can never predict which is going to be heads or which is going to be tails. You just know in the long run, this is what is going to happen. Make sense?
Yeah. I'm so excited.
It's an
We're
exciting
to go.
thing. So the first kind of trend type system. So what I've got 4 generic trend systems. And the hope is one will kind of hit home with you more than the others. And that will be the initial system that we get you on next week. So next week we're going to get you on the sim, get you trading, and then continue your education while you're trading alongside in real time. So the first one is just using trend lines. So we talked about trend lines in the last one. We talked about how to draw trend lines. Of course, you need 2 points for any line. Anything other than that is an extrapolation. So I pulled up Ford Motor Company here, and you can see the 2 circled areas are the 2 points that initiate the line. The green arrow is the third touch of the line. So a simple trend line system may say, I'm going to draw a trend line and connect 2 points, and when the third point hits, I'm going to buy it. I'm going to put my stop X percentage below it, so I know when I'm wrong, I'm out, and try to take profits at 2 or 3 times, whatever that risk is, rinse and repeat, right? Benefits of this system, again, are the same as the drawback, where it's kind of artsy, right? There's no hard and fast rules. How I drew this trend line may look silly to some people, may look fine to other people. There are certain rules to trend line drawing, but the rest are kind of, how I keep saying trading is an art and a science. This is more leaning on the art side, a little less on the science, but you can still see how you can build very systematized rules to it. I'm going to enter on the third touch. I'm going to sell here. I'm going to be wrong here. You can build rules around this. So essentially, a moving average, and there are many ways to calculate moving averages, and we're going to go through indicators. There's indicator list as long as your arms. You know, anything you can think of. We're going to go over the basics of them, and again, you're going to take what you like and leave the rest aside, which is just part of trading. But a moving average is simply you take the closing price of X periods, and then you move that as things go on. So again, I believe this one is a 50 period moving average. So it's taking the 50 of the last closing price of Google, and then it's updating that on a daily basis, right? So right here, the average of the 50 prices were right here. Now, we know the moving average is going to dip because the price is below the moving average. And just by the way the averages work, the longer and the further that the price is below the moving average, the more it will bring the moving average down. That makes sense?
I think so, yes.
So why people use moving averages is one, for a system like this. Two, it's a way to quickly identify trend. You can see that the moving average is pointing up as the trend is going up, and the moving average turns to point down as the trend goes down. Right? So you can see that if you took the price data off this chart entirely, and I said, you know, for this period of time, is Google moving up? You could say, okay, yeah, it is. And you're not even if you couldn't see the price of the stock, you couldn't see any of the candlestick data, just the moving average.
Mm-hmm.
You could say, yeah, Google's going up, and then when it turns, yeah, Google's going down. So that's one thing. The other thing is to eliminate the craziness of prices, the same that we said was the benefit of a line chart. If you're just identifying trends, that's a good way to do it. And in this case, people can actually use moving averages as a trend system. And the simplest way to do it is you take one moving average, you test it on that individual stock and see if that's something that works for that stock. And you say, when price crosses above the moving average, I'm going to buy, and I'm going to stay long until price crosses back below the moving average. So you can see I've denoted where trades would be with red and green arrows here. So the first one, price crosses below the moving average, you take a short. You say, I'm going to stay short this stock until price gets back up through the moving average.
Now, I see that, like, right after that red arrow,
Yep.
where you would have shorted, it looked like there was, like, a little bit of, like, a comeback.
Yeah.
A little, like, nice green streak up. And that one ticked a little bit above or is that just the wick?
That's usually just the wick. So generally speaking, people will just say to stop getting wicked in and out if it crosses above and below. Because remember, each candle can be subdivided into a smaller amount of candles. So every day can be subdivided into 15 minutes, which can be subdivided into 5. So how annoyed would you be if it just ticked up above that line for 1 minute? And that was it. Our dog's defending us from a squirrel or something. So what most people will do to deal with that is they will say, I will only do it when it closes. Right? If the price closes above, so the day ends and it's above the moving average, that's when I'll make my decision. And the beauty of that is then if you are trading this manually, all you need to do is pay attention to the end of the day. So you need to sit down maybe 5-10 minutes before the close, so 4:45 or something our time, and go through all your trades and say, are any of these above or below the moving average? If not, stay in them. Right?
Okay.
So the benefits of these trend systems is trend systems always have a lower win rate. Statistically speaking, a pure trend system will have a 45 or so % chance to be right.
Okay.
On this chart, you can see your first trade, you would have entered here and exited here. You would have made a little bit, a decent amount, right? Then the next trade, you probably would have bought here and then sold here, right? Again, maybe a little bit, maybe you lost a bit, right? And then you would have covered your short a few days later for a loss. So really nothing good you would have maybe been up a little bit of money,
Yeah.
maybe flat for all that. And then you got this monster run where it's kind of hard to see because the chart's small, but this is about $150 a share, right? So you have 100 shares, that's right 10,000. Just had to double do that math in my head. And then you would have sold here and taken a short, and now you would still be short Google. So what happens with trend systems is that you're not right very often, but when you are, you get these huge blow up moves. So say those first few trades, you ended up losing money on them net, right? That those other two trades you would have made a bunch on. So you won on 2 and you lost on 4, for example, but you still made a bunch of money. And that's the beauty of these systematic kind of trend systems. Does that make sense? So if one moving average is good, then 2 moving averages have to be better. And there is a 3 moving average system. But
I was just going to say, are we going to do threes here in a second?
I could, but as you talked about in the other one, sometimes price would just kind of go up and below the moving average quickly. So to remove that, people will add an additional moving average and say, I'm only going to buy when the shorter term one crosses the longer term one. Because you think about it, a short...
Okay.
So,
okay.
so you got it?
Okay. Okay.
All right, makes sense now?
Yeah.
Right? Because a shorter term moving average is going to be more sensitive to price movement.
Right.
And a longer term moving average is going to take longer for
Right.
price to move.
Right.
So this is the same chart. The blue line is still the 50 period moving average. The pink line is a 20 period moving average, which reacts quicker. So you can see that there's less signals on the same chart and you would have made more money. So the downside to a crossover system like this is that, right, if you had initially sold, right, we noticed you would have sold right up here for the first one. The first time it dropped below the blue line, you would have sold. In this system, you would have had to wait 4 or 5 days for it to cross. So a 2 moving average system is for someone who wants to be right more often, but is okay with
Waiting?
missing. Yeah, you're going to miss more of the bottom. You're going to miss more of the top.
Okay.
Right? So it's, and this comes down.
Those patient folk.
Well,
Not I.
well, but there's always a trade-off, right? So, and this is why I don't just build systems and sell them to people. And I teach people to build their own. Because some people look at a 40% win rate and they go, oh shit, I could never do that. I would get, if every 10 trades I lost 6 or 7,
Right.
I would get too emotional. And when that good trade came along, I wouldn't be in it. Right?
Right.
So that's where there's other people who would say, I don't have the patience to wait for all of these stars to align. I would rather be in and out, even if I'm wrong more often. So which one it ends up making money, it's probably a wash in the long run. So it's like the point is the same. The point is you're trying to get 50-50 win rate, maybe a little bit better, and you're trying to hold on for these big moves. But you can see this 2 moving average cross system, right? Your first trade, you bought in here, and then you sold a little bit, and that was a good trade. But then this trade that was a little bit of a profit before is about a flat the next trade. But then you notice that you were in and out during this period right here because you saw that price crossed above and below. But because price only crossed below for a bit and then back up, the moving average stayed above. So you would have bought here and you would have gotten more of this move than before, right? If we go back here, in that same period of time, you see you're in and you're out and you're in and you're out. And again, every time you press the button, the broker takes his bid. So again, you have to be more patient, but you'll be wrong less often. We call it getting chopped up, right? When you buy something because you think it's going to go up and then it immediately reverses, so you sell it. And then it looks like it's going to go back up again, you immediately reverse and you sell it. We just call it being chopped up because you're just taking little tiny small losses over and over again, which is fine if you eventually catch that big move, but some people get frustrated. So the last one is a band system. So what this does is it uses kind of like the single moving average does, where it says if you're above, get me in, when you're below, get me back out.
Okay.
But what this does is it takes that center band. So between those two lines, there's a band in the center that you just can't see. Right?
Okay.
I left that out. That is going to be the moving average. And then what this does, it says, I'm going to add a little bit to the top of the moving average and take away a little bit of the bottom of the moving average and create this band. And it does it based on how much the stock generally moves that day. So the system is still the same. You buy not just when you break above the moving average, but when you break above the moving average and the band, and you sell when it breaks the other way.
Okay.
Right? So you would have bought.
Now, do you calculate your own band? Like, if it's off the moving average, do you calculate like how far off the moving average you're comfortable with, or
Yep.
like?
You can, and there's standards to it, but this will be something that will be more about you as well. So if the band is tighter, you're going to get more trades. You're probably going to be a little less accurate. That's going to be depending on you. You can see how the band actually gets wider down here because it's based off what's called ATR, so how much the stock moves on average. Right? So you can adjust these yourself, but this is the beauty of what Trade Ideas does with their backtester, is you can test and say which one gives me the number of trades versus the probability of profit versus how much I make when I'm right, a combo that kind of makes sense to me. But again, you can see the trade here in Google would be you'd buy here, and then you would have sold here, and you would have shorted down here, and you would have covered right here. So you get, again, more of the same moves. But the whole point of this is that you can see that the systems all kind of generate, they all try to generate, and they all try to capture the exact same trades. Right? You see how the difference is when you get filled, but the trading system is the same, which essentially just says try to identify when the stock's in an uptrend and stay long, buy it and stay with it until that reverses. Right? And your hope is that, maybe you get 4 or 5 trades a week on something like this, and that ends up becoming either a good part-time income or a full-time income if you get real good. But it's just the concept is always the same, whether it's intraday, daily, investment, whatever. You're trying to identify what way is the direction going, right? The trend is your friend.
Till the bend in the end.
Till the bend in the end. And then you want to make sure that you're able to get out, or in this situation, reverse, get short. Make sense?
I think so.
So we are going to, in next week, and I'm saying this now to make sure I do it, get you a simulator. I'm going to have a very basic scan for one of these things, whichever one you prefer. Either the trend line one's kind of hard to do, but we could do it because it's more subjective. It's less robotic.
I like that one the best.
Well, I can still find you. I can do a linear regression type of thing.
And it might just be because I feel like I understand that one the best too, so we'll see.
It's the way a Brian Shannon or a JC or any of these guys that you've heard me talk about, they all trade differently than I do. And you know that I respect a lot of them a lot as traders. But what makes sense to them doesn't make sense to me. So again, I'm going to teach you all the concepts, but then you're going to piece together your own trading plan that makes sense to you, and I'll make sure that it's not silly. Like I get some that they don't make any sense. But as long as yours makes sense to you and it makes sense mathematically, you do your own thing. Because I don't want you to do the same trades as I am. Because then when I'm having a good month, we're both having a great month. When I'm having a bad month, we murder each other because we're both having a bad month. It doesn't really help, right? I want you to find your own trading system that makes sense to you. And this might just be because it's like a draw yourself thing, right? You see me all the time. I grab the iPad and a little pencil and I start drawing my trend lines in. This may make sense to you. And what you'll do is you'll have a list of 10 stocks or so. You'll scan each night. You'll draw your lines and set your orders and move on with your day. So that is this one. So here we are again. Again, if you're seeing this on my channel, follow Jess. And if you're seeing it on Jess' channel, follow me. Same with Twitter and all that type of thing. And is that it?
I think so.
Any more questions?
No.
No? Okay. See you next time for a test.